if you can just mute your mic, that way there's no background noise or anything like that. We love to hear your engagement, but we also want to make sure that it's not distracting. So that's just something that we always like there. So let's see. All right. Instagram is giving me a little bit of trouble today. It says for business owners. There we go. Okay. All right. Make sure it's clear. All right, so here we go. So let me go ahead and start the recording, and let me put this 1 second. Okay. All right. So the first thing I'll do is let me go ahead and share my screen so that you can see the presentation. And then once I do that, let me go ahead and start the recording as well, actually. Do this. Okay, so let's see. On this computer. Okay, so hopefully everybody can see my screen, but thank you guys for being a part of this Tax Tips for Business Owners workshop or presentation. Today, my goal is to basically show you all the different tips and tricks that's out there when it comes to taxes. And please bear with me while this presentation loads. I'm on a different computer today, actually. But today, I want this to be an engaging conversation, an engaging discussion that we have. You know, what I like for my presentations is that it's not all just me talking, but also we do get some engagement. What you can do is you can unmute yourself and ask any questions at any time. You know, and if you don't feel comfortable, unmute yourself, then what you can do is you can type in a chat box as well. All right, so those are 2 ways to ask questions if you're on a Zoom. And for those that are just joining, we have 3 platforms going today. So we have our Zoom platform, and then we also have our Facebook and our Instagram platform. So let me just make sure this presentation going. This computer can be a bit slow sometimes. Please bear with me. 1 second. Okay, I don't know what's going on here. All right, so while the presentation is loading, let me just start it off. So the purpose of this presentation, once again, is tax tips for business owners. We're here to talk to you guys about different ways to save on taxes, different ways to make sure you're set up correctly from a business standpoint. So that's the bulk of what we'll be doing. We'll start off with an introduction of who I am. You know, so I'll introduce who I am, and then we'll also go into incorporation. So making sure that you're set up correctly for taxes, you know, and then so we'll start off with incorporation, then we'll go into the taxes as far as different tax deductions, different tax strategies. Then we'll go through how to keep track of your books and everything like that when it comes to the taxes. Because we don't just get to tax season without doing something, you know, per se. We have to do things throughout the year so that we're financially sound and we're ready to file the tax return. I can't tell you how many times I see a client or a client comes to me, they say, hey, can you file my taxes? However, there's no like bookkeeping, there's no books and records, there's really nothing that's out there to do the taxes. So then what we have to do then is we have to go backwards and start with the bookkeeping, which we do offer that as a service, or we train the client how to use QuickBooks, which is our preferred software when it comes to keeping track of the numbers. But remember, throughout the presentation, you can ask any questions that you want. To ask a question, you simply can unmute yourself, right? So you just unmute yourself via the Zoom platform, or you can type in a chat box on Zoom. If you're on Instagram or on Facebook, then you can also do the same thing. Basically where you just type in the chat box. So introduction of who I am. My name is Jeff Badu. I'm a licensed certified public accountant. I graduated from the University of Illinois at Urbana-Champaign with a bachelor's and a master's degree in accounting. I'm a parallel entrepreneur and a wealth multiplier, and the founder and CEO of Badu Enterprises LLC, which is a multinational conglomerate in the finance industry. And the way that I like to introduce my firm is by sharing a story. So in 2016, I took it upon myself to turn in my 2-week notice. It was September 2nd, 2016. That's when I turned in my 2-week notice in exchange to become a full-time entrepreneur. And the business that I was working on was Badu Tax Services LLC, which is now a multinational tax firm that does tax preparation, planning, and representation for individuals and businesses across all 50 states in the U.S., as well as in over 15 countries at the moment. We've been very, very, very fortunate to ultimately grow our client base and to just making sure that we that we grow. So it looks like, I think Ashley, you're saying that you're experiencing volume issues. I don't know. It's yeah, it looks like, okay, it looks like somebody said volume works fine for her. Do you mind restarting or logging in through, like, if you're using a computer, do you mind logging in through your phone? You know, I think sometimes we do have these issues with Facebook and Instagram, so please bear with us. But in 2016, that's when the tax firm was ultimately was launched. From 2010 through 2016, I was working on my business plan, and that was when I was in college. So as a freshman in college, I came to the U of I in 2010. In August of 2010, that's when I came to the U of I and started working on the business plan. And with that, I wanted to create a tax firm that was dynamic. It wasn't just your average firm that just did what everybody else did. I wanted a virtual CPA firm because I noticed that people were going virtual when it comes to taxes and accounting and everything like that. So that's part of what I wanted the firm to be known for, was, you know, going into this virtual world. And then I also wanted to make sure that I offered education for my clients and everything like that. Okay, I think, Joshua, if you don't mind muting yourself, looks like there's some background noise. So basically in 2016, I wanted to launch it, or I basically decided to launch the firm. I was actually supposed to launch about 6 years after working full time. So that would make it, I started working full time in 2015. So by 2021, actually next year, was when I was supposed to launch the tax firm. You know, but instead, God was very good to me, and He allowed me to launch the firm in 2016. 1 year after working full time, I was fed up, and I just had it. I said, you know what? Let me just take the clients that I have now. I was able to build up a client base of 100 clients, and decided to basically launch the firm in September 16th of 2016 was when I officially left PwC. And then, you know, and I was working on a business. I continuously worked on a business at that time. It wasn't tax season, so we weren't necessarily doing taxes at that time per se. But what I was doing between that time and tax season, which starts off in January, was I was networking. I was refining the business plan. I was coming up with pricing strategies, different tools. I was going through training. I was doing a lot of things to help me lead up to starting the business. So I formed the LLC, Badu Tax Services LLC, on September 30th of 2016. So Badu Tax Services was officially registered as a limited liability company in the state of Illinois on September 30th of 2016. For those that want to verify that, it is on CyberDrive. Just in case you wanted to know, like, the fun facts with that. But, you know, what I was doing, the reason why I want to share all of these is because another business came about. So I was actually driving for Uber from September 16th all the way until around Thanksgiving or so. I was driving for Uber, and just to bring in some extra money. At the time, I had a mortgage. I had bills to pay, so I needed money to come in. PwC at the time actually owed me a month's worth of pay, so I knew there was some money coming in there too. But at the same time, I also understand the importance of having having reserves, having savings. I had $10,000 to my name at that time, 5,000 of which I took to invest into my business, Badu Tax Services LLC. And then once that investment was made, I kept driving for Uber and just kept bringing in money in any way possible that I could. But the thing with Uber was, I said, you know what? I don't necessarily want to. I had to make a decision. Should I keep driving for Uber, or should I just launch the tax firm, focus all my energy and time? That's one thing I learned as an entrepreneur is focus. Focus on one thing at a time. So I basically had to make the decision. Should I keep driving for Uber and bringing in money, or should I just focus 100% of my efforts into my tax firm and just focus on that? The tax firm at the time, just to give you some numbers, was making about $150 per hour, right? So per tax return, we usually made about $150. But Uber on the other hand, it was about $20 an hour, give or take. So 150 was greater than 20. I said, you know what? Forget the whole Uber thing. And I put my car on the street and basically exchanged it for a home office, which is what you still see today. Where we started off the tax firm in 2016 is exactly where we still are, in a home office. And I think it's important to note that, because you don't have to have these big fancy corporate offices or anything like that to say that you've gone ahead and started a successful business. So what I did was I stopped driving Uber. It was around, Thanksgiving. And here's what I did though. Here's what a lot of entrepreneurs don't do. Here's what they don't tell you when you go through entrepreneurship training. Here's what you don't learn in your journey as an entrepreneur, that you should build multiple streams of income. So the birth of Badu Investments was on November, right after Thanksgiving. It was November of 2016, and that became my car rental company. Now, I know I said focus on one thing at a time. However, what I mean by that is focus on one active business at a time, but you can have passive businesses on the side, right? You can have businesses that make you money while you sleep, while you're working on your main company, which is my tax firm at the time. So instead of driving for Uber, I found a site called HireCar at the time, and I posted my car on the platform. And instead, I posted the car on the platform. It was a 2012 Mazda 3, fully paid off car, and somebody decided to request it. They said, hey, I'll pay you $1,000 if you let me use your Mazda 3 for a month. I was like, wait a second. I scratched my head for a second. I'm like, wait a second. You're going to pay me $1,000 a month, and they pay you up front, by the way. You're going to pay me $1,000 a month just for using my car that was going to be sitting on the street anyway, that I wasn't going to be driving because my firm is virtual. Right? We operate out of a home office. We don't need to drive anywhere. And I said, well, why not? This person was vetted. They went through a background check through the site. And the car didn't have a car note. It didn't really have any expenses at the time. So I accepted the booking request. Lo and behold, the guy picked up the car 2 days later, and I had $1,000 deposited into my bank account. Now, as an entrepreneur who's just starting out, that's huge. To say that you made $1,000 without you breaking a single sweat, that was huge. So what I did was like, you know what? I probably need to start a car rental business. And that's exactly what I did. Fast forward that year in 2016, we accumulated about 10 cars total, leading into 2017 as well. We bought some cars in 2017. So we had 10 cars, and on average, they made $1,000 a month. So that's $10,000 a month in passive income. By the way, Badu Tax Services wasn't my first six-figure company. It was Badu Investments. It was my passive income source that actually led me on the path to entrepreneurship success. Badu Tax Services, in the first year, it was doing good. Like, it was on a trajectory to do great. But it wasn't like the Badu Investments. I learned how to create wealth fast, right? Using little of my own money to make more money. And this was all passive income. That's what I want you to understand today, is that Badu Investments is not an active company, meaning I don't actively manage the operations or anything. It was a passive income stream. You're talking a six-figure company as the very first company to go the six-figure route. And the tax firm was just building alongside with it. So my advice to entrepreneurs today is learn how to build multiple streams of income. It's great that you have your main business, whether it's slanging real estate, meaning you're a real estate agent, you're a doctor, you're a nurse, you're a dentist, you're an attorney, you're an accountant, whatever it is. Find ways to make money while you sleep, while you work, while you're on vacation, because then it allows you to focus more on your core business, right? It doesn't put so much pressure on your main business. It ends up basically allowing you to make more money on the side. So let me just recap the timeline. 2010 was when I built the business plan for Badu Tax Services. 2016, we launched Badu Tax Services and Badu Investments at the same time. And then in 2020, we now own a multinational conglomerate known as Badu Enterprises, which owns 12 businesses, and Badu Tax Services is the main one. But then we also have another beast in the mix, which is Badu Investments, and now it's primarily a real estate investment company. We own and operate and oversee about 57 units in the city of Chicago right now. We're always looking to grow. We focus mainly on the south side. What we do is we just buy and hold rental properties, right? We're buying rental properties. We're leasing or renting them out to tenants so that they can earn or they can have a good place to live. In exchange, they pay us rent so that we can continue buying more real estate. So I wanted to give you guys that lens as an entrepreneur, what I had to go through. I started a company from scratch, Badu Tax Services. Now it's a multinational tax firm that operates in all 50 states, 15 countries, and we're still growing. We have about 33 team members, all of which are fully independent. Across the enterprise itself, we have about 100 total. This was all built within the past 4 years. But remember, the business plan dates back all the way to 2010, but we didn't launch until 2016. So I always like to share that story just so you get a sense of, the presenter today and the perspective that I'm coming from. I've been through a lot as far as what entrepreneurs can go through. I've been through lawsuits. I've been broke as an entrepreneur. I've been wealthy as an entrepreneur. And I've been the guy that does all the nitty-gritty, tactical work. And now I'm the guy that does more of the strategic, overarching, overseeing, looking from high level, type of lens. So I've been on both sides of the spectrum. So today my goal is to share with you how to successfully start the business and make sure that it's financially sound, and then also you're not overpaying in taxes as well. Main reason why I'm here today, though, is because, I'm very passionate about financial literacy. We own an organization called Badu Foundation Incorporated, and that's our financial literacy not-for-profit, which does financial literacy education to the youth, homeless, and adults. And we just teach, we teach financial literacy to the community. And ultimately, I'm very fortunate to be where I am today. And let's get going with the conversation. So, business incorporation. And it's and by the way, we do recommend that you take notes because this is very, very important content, and we want to make sure that you get the most out of it. I'll be going until about 12:50, so I won't be presenting for that long. So just so you get a gauge on time, I'll go until about 12:50, and then we'll leave about 10 minutes at the end for Q&A. So there's two different types of entities. There is the limited liability company, and then there's a corporation. Now, you might have noticed in the previous slide that all my companies end with the letters LLC, which stands for Limited Liability Company. Here's the thing. Even if you have a child who's 7 years old and is selling lemonade at a lemonade stand to kids or other folks, you want to make sure that that kid has an LLC. Because if that child makes bad lemonade, let's say they made the lemonade and somebody got poisoned by it, well, guess what? That child is on the hook for liability, and then you as a guardian, you as the parent who allowed the child to do that, is also on the hook. Instead, what you can do is you can create an LLC, limited liability company, which protects your personal assets. There's 3 reasons why somebody should incorporate their business. And by the way, this is before you do business with anybody. Before you make your first dollar, before you do your first real estate sale, you should have an entity in place. It enhances your credibility, so it makes people take you more seriously. Me personally, I don't do business with anybody unless they have an entity behind them to protect them. That lets me know that they're really serious about what it is that they do. Number 2, it protects your personal assets. This is actually the number 1 reason. If somebody sues you, and I've been sued before, by the way, if somebody sues you, they can only get what's in the company as opposed to what you own personally outside the company. And then you also get easier access to capital. Banks love it when you have a business entity. It also lets them take you more seriously. And you cannot apply for things like loans, business credit, unless you have a business entity behind you. So LLC, why is it my favorite one? Is because it's very easy and simple to start. It's very, very low cost and low maintenance. It protects your personal assets just like every other entity. And then also, it's flexible. You get to choose how you want to be taxed. Excuse me. For example, our tax firm, and we also have a management consulting firm, those are both taxed as an S corporation. With an S corporation, it helps you save on FICA or self-employment taxes. FICA is about 15%, by the way. So if you don't want to pay an extra 15%, and taxes will go up in the future, you know, especially how the presidential candidate, by the way, I'm still shocked they haven't finalized the election, by the way. But the way that the results are going, taxes will go up in the future. So if you want to save about 15% on taxes, then you should elect to become an S corporation. That's more for your active business income. So your tax firm, your law firm, your real estate brokerage, if you're a real estate agent, and let's say you're a contractor, you know, you're a doctor, you're a nurse, whatever it is, anything that you actively do, remember you're focusing on one core business at a time. So that core business is what you're choosing to become an S corporation. It's going to save you about 15% on taxes. So that's one big reason why I love the S corp, is because it saves me on FICA taxes on my active business. And then for my passive business, I might elect for it to be taxed as a sole proprietorship or a single member LLC, one that is not an S corp, because passive income, right, by doing investments, for example, we don't have to pay self-employment taxes because we're a passive income structure. So we don't have to have the S corp. You know, so if you're LLC and it's investment related or passive income, then it's fine to remain taxed as a sole proprietorship or a single member LLC. But if you have active income, meaning that you're a doctor, you're a nurse, you're an accountant, you're an attorney, then you should have an S corporation. Now, there's another entity type, which is C corporation. C corp also gives you asset protection. It does have some tax benefits, but however, you have to pay double taxation. What I mean by that is not only do you have to pay taxes on your profit, so let's say you made $100,000 in income, and then you spent $25,000, now you're left with $75,000. You have to pay taxes on the $75,000, regardless of whether or not you spend it. But here you go. If you spend any part of that $75,000, you have to pay an additional tax known as the dividend or long-term capital gains tax on that. So not only are you paying taxes at your ordinary tax rate, or the C corp rate, which is about 21% or so, but you also have to pay an additional 0 to 20% depending on where your personal tax rate is. So C Corps can definitely be, they can definitely lead to a lot of taxes being paid. So usually we don't recommend C corporations for our small businesses unless you're looking to become an Apple, Microsoft, or a public company. We don't recommend you be a C Corp. Instead, elect to be taxed as an S corporation, which gives you the favorable tax treatment, and it also saves you on FICA, and there's no double taxation for an S Corp. Meaning that $75,000, whether you take it out or not, you only pay taxes on this. You basically pay taxes on the $75,000 and not anything you took out. So let's say you took out $10,000 or $20,000, you don't have to pay additional taxes on the $20,000. You just have to pay taxes on the $75,000 of profit. Somebody asks, well, how can you save money on taxes? I say reinvest the money either back into your company or an income producing asset, like for myself, it's real estate, or in your retirement or in your kids' education. So the more you reinvest the money, the more you leave the money outside of the bank, the less taxes you end up paying. That's the secret to taxes. Don't keep money in the bank. However, you should have 3 to 6 months worth of your expenses saved in the bank at all times. So if your monthly expenses are $1,000, you should have at least $3,000 to $6,000 liquid cash in the bank at all times. So I'm talking about money outside of that. You should reinvest that money. Don't leave it sitting somewhere, or the government will get their hands on it. So that's just to recap. There's LLC, Limited Liability Company, which has the protects your personal assets. It's low cost, low maintenance. And then it also is flexible because you get to choose how you want to be taxed. Then you have the corporation, and preferably an S corporation. And that one is also protects your personal assets. It is a bit more expensive and more high maintenance than your LLC, but you don't have to, you get favorable tax treatment with the S Corp. You don't have to pay any FICA or self-employment taxes. Remember, an LLC can elect to be taxed as an S Corp, and so can a C Corp. That's why there's only really 2 legal entity types. There's LLC, and then there's a corporation or a C Corp, but both can elect to be taxed as an S Corp. Now let's talk about taxes for a bit. And by the way, if you have any questions, what you can do is you can unmute yourself, or you can just wait till the end, or you can type in a chat box and we can answer them while we're going. Why should you file taxes? Like, why in the world would anybody want to file their income taxes? Well, here's the story. If you earn $400 or more as an entrepreneur, a 1099 business owner, however way you want to term it, independent contractor, you have to file an income tax return no matter what. No matter what, you have to file an income tax return. If you don't file your taxes, so one of the lessons that we've learned today, by the way, is file your taxes no matter what. If you don't file your taxes, the IRS is going to send you a friendly, I like to say friendly letter, saying, hey, why didn't you file your taxes? Please go ahead and file your taxes. Right, that's a very, very friendly letter. They usually give you about 30 days to respond to that letter. If you don't respond to the letter, let's say you say, you know what, screw the IRS, let me just throw this letter away. They'll send you another letter saying, hey, by the way, we received 1099s from these people. Because before you receive a tax document, the IRS already has their hands on it. So if they have 1099s with your name on it, then they're going to send you a letter and say, hey, we received this income, or we received this document showing how much income you made, but you decided to ignore our letter. So we are going to send you, or here's how much we think is due, because we don't know your business expenses. When we get these 1099s, we don't know what your expenses are. So the IRS has no way of knowing what your expenses are unless you file your taxes. This is why you need to file your taxes. It's for compliance. So basically, if you decide not to respond to that letter, then the IRS is going to send you a bill 30 days after that. And if you don't pay, they can come knock on your door. They can seize your car. They can seize your house. I had a client who got his car seized one time, by the way. They can seize your car. They can seize your house. They can take you to collections. They can garnish your wages, your bank account. They can put levies and liens on your bank account. they can do a lot. Anybody that can reminisce with this one, I'm sure you know the pain that goes along with it. So we file taxes, even if we don't think we should file. Just do it. Just file it. You do it once a year, and just gives you that peace of mind that allows you to hopefully sleep better at night. So taxes help you stay compliant with tax laws and regulations. You do file annually, so everybody files once a year, and then you might have to make quarterly estimated tax payments. It doesn't mean you file quarterly. You simply make quarterly estimated tax payments so that you can send money in advance to the government, so that we can see how much you owe throughout the year. The IRS doesn't want all your money at the end of the year or when you file your taxes. They want it now, or they want it throughout the year. Also, while you file taxes, you can potentially get a refund. So if you get credits like the child tax credit, the earned income credit, the American Opportunity Credit, well, you can get a refund now. Or maybe you overpaid in estimated tax payments, or your paychecks were over withheld. Well, you can get a tax refund. And we know with COVID-19, you can also get a stimulus check. There's so many benefits. PPP loans, Paycheck Protection Program loans. All these things require you to have a tax return. So you can't, I tell people, if you want government cheese, you have to cooperate with the government. They'll feed you all the cheese that you want as long as you cooperate. If you don't cooperate, if you're not compliant, they won't feed you any cheese. Instead, they'll try to take cheese from you. And one nice thing about business owners, being a business owner, you can write off your entire life, basically. So you can write off most, as a matter of fact, I will cross off the word most, and I would say all of your business expenses. And let me tell you what I mean by that. We got about, let's see here, we're doing pretty good on time. We got about 12 more minutes of content, and then we'll leave 10 minutes at the end for some Q&A. So taxes. As a business owner, as someone who has your LLC or your INC or incorporation, you can write off basically everything. A write-off is simply a reduction to your taxable income so that you don't have to pay as much taxes. It is not a dollar for dollar refund or anything. It's simply a reduction of your taxable income. So let's say your taxable income or your gross income is $100,000 and you have write-offs of $25,000. Well, it helps reduce your $100,000 income down to $75,000 because you reduced it by $25,000. So once you get the $75,000, then you apply your respective tax rate, which is 10 to 37%. And remember, if we do have a new president, then that rate is most likely going to go up. And I've heard as high as 60%, which, by the way, the highest tax rate in the U.S. right now is 37%. The average tax rate across U.S. history was 60%. The highest tax rate in the history of the entire U.S. was 94% back in 1944 when they were fighting the wars. So will tax rates go up? Probably yes. With all this stimulus going out, guess who's paying for it? We have to pay for it at a certain point. The U.S. is an insane amount of debt, so somebody has to pay for it. So with business expenses, it's pretty important to get pretty aggressive with the write-offs, because you and I know that you can use your money better. Probably, I can bet on it that you can use your money better than the government if it's in their hands. So in order for a deduction to be tax deductible or a write-off to be allowed, it has to be both ordinary and necessary. Ordinary simply means that it's in the ordinary nature of your business. So that means that, for example, it's very ordinary for me to have a laptop as a CPA or as an accountant. It's very ordinary for me to have a tax software. Necessary means it's necessary for me to grow my business. It is very, very, very necessary for me to have an iPhone. It is very necessary for me to have an Apple Watch. It is very, very, very necessary for me to have a nice car that I can drive around and potentially meet with new clients and new prospects. Of course, there's not a whole lot of that going on with COVID-19, but you get the point. It is extremely necessary for me to go to Jamaica and take a board meeting, there, and to grow my business. It's extremely necessary because we're an international company and we need to look at different international destinations in order to grow our business, right? Or you can term it like that in your books. So examples include meals. Anytime you eat with a prospect, a business owner, a parent, a spouse, and you discuss business, that's a tax deduction because that was an ordinary necessary. It was ultimately necessary for you to have that meal in order to grow your business. And it's ordinary for business owners to eat. Travel, right? So going out of town travel, even personal travel. You can have a board meeting where you can have another reason why we form these entities is because it makes our expenses and deductions much more legitimate. So travel, if I'm traveling out to Jamaica or if I'm going to the Bahamas, wherever it is, that's a tax deduction. We just have to document it in our board meeting template. Fees such as MLS fees, listing fees if you're a real estate agent, dues, subscriptions, let's say that you have an office and you have a Netflix account. Well, sometimes you might invite your clients to come in and watch Netflix while they're sitting and waiting to be serviced. Retirement savings. Right? Retirement, business owners are in the best position to save for retirement. You can save $50,000 as a business owner for retirement when your standard individual or W-2 individual can only save up to about $20,000. So you can save almost 3 times more than the average individual for retirement if you're a business owner. And some of this retirement savings can actually be deducted on your tax return. Let's say you have a SEP IRA, a simplified employee pension plan that allows you to put up to 25% of your profit in the retirement account. You can deduct that on your tax return as well. Or you can be smarter and roll that money over into a Roth IRA where you don't have to pay taxes at a later time. So for retirement, we typically save on an after-tax basis as opposed to a pre-tax basis. There's also solo 401k. There's a simple IRA. There's so many retirement accounts out there. We won't get too deep into it today, but understand that business owners are in the best position to save for retirement. The next thing is a home office. What you see here is a home office. This is not some big fancy corporate office downtown. This is simply a home office, right? So you can use one of your rooms in your house or in your condo, wherever it is, or a designated space, a studio. You can use that space as an office space and you can deduct that as a tax deduction. The way to do this, you can use the simplified method, which is simply $5 times the square footage of your office, or you can use the regular method. And by the way, simplified method is usually for those who own a home, because when you own a home, you also want to use your Schedule A itemized deductions, your personal deductions, such as your mortgage interest, your property taxes. You want to benefit from those things, but then you also want to get the home office deduction. So you can get up to $1,500. 300 is the maximum square footage that you can deduct. So 300 times 5 is $1,500, and you get a free tax deduction basically. If you rent, then you want to use the regular method where you simply take your home office percentage, so your office space percentage, or as a percentage of your total apartment, and then you multiply by your rent, utilities, gas, all that stuff. By the way, utilities such as your cell phone and your internet, that can be written off in full usually. So you don't have to apply the percentage to that one. You can just do it at 100% deduction. But other utilities such as cable, gas, electric, those types of utilities, you typically want to apply the home office percentage. Health insurance premiums. You can also deduct any health insurance premiums that you pay. That's another huge benefit. And the purpose for this is to encourage you to have health insurance, especially with Obamacare. By the way, open enrollment just opened. I believe it was Monday. And you can ultimately enroll in a health plan. And then you also get, so I did mention earlier that you have to pay FICA or self-employment taxes, and I said 15% earlier. Well, you actually get to deduct half as an adjustment. So that 15% ends up being about 10% effectively. When it's all said and done, when you really do the math, you end up paying 10% if you're not an S corporation. So if you don't have a tax favorable treatment such as an S corporation, then you're paying an extra 10% tax. This is one of our key tax planning strategies for our new clients, by the way, and even our existing clients. This is one way that we definitely leverage it as a benefit, and we help our clients save money. You know, you can use that money to save for retirement. You can use that money to do a lot of things that are more productive than giving it to the government. So consider becoming an S Corp for tax purposes. That can ultimately help you save an extra 10%. So instead of 15%, it's really 10%. Now, how do you keep track of all this? This is very important. This is very, very critical. Like you're a business owner and you're so excited to do your business. And I'm excited for you. I love entrepreneurs. I love it when somebody can take the leap of faith and just do whatever they want, basically. You know, just be an entrepreneur. Right? It's great. It's an awesome world. When I became an entrepreneur full-time in 2016, the world just opened up. Opportunities upon opportunities opened up. You know, abundance just opened up in my world. But there's little things you have to do, and a lot of people don't do this. I never understood why. I mean, you're running this successful business, it's doing great, but you're forgetting to do such simple things like keeping books and records. And if you don't have the time to do it, hire a bookkeeper. Right? It's time versus money. Either you have time or you have money. If you have more time, basically get more money. If you have more money, use that money to buy more time. So if you can do it, at a minimum, at least start looking for a bookkeeper or somebody who can help you navigate through the lenses of bookkeeping. So bookkeeping is very important. Once you have your LLC or your INC form, you need to make sure you set up your books and records after you get your business bank account. So we can't even talk about the taxes really until we talk about this. How do we keep track of our books? We use something called QuickBooks. Trust me, when I found this out in 2015 was when I discovered QuickBooks, I was like, holy cow, this thing can really change lives. I mean, it saves you so much time and energy and just automates the process. So QuickBooks is an accounting software. It's as low as $7 a month. Very, very cheap. Allows you to automatically download and categorize transactions. So you literally link your bank account and it basically pulls all your transactions from that bank account. You can participate in online billing. You can create professional looking invoices and estimates. You can upload receipts through your phone. You should keep track of your receipts, by the way. Remember, you want to make sure you're audit proof, you're bulletproof when it comes to the taxes and the accounting, because we can have all these strategies, all these tax savings, but if we're not actually backing it up with documentation, it doesn't really mean anything. Because if we get audited, and it can happen, it's going to be pretty painful. Thankfully, nowadays, most receipts are digital, so you don't have too much to worry about there. But QuickBooks can also help you create customized financial reports. You can track your miles. You know, you can track your business miles using QuickBooks. You can track inventory. And I know I have quite a few clients that I see listening today, and when I told them about QuickBooks, it changed their lives forever. The pros of QuickBooks, it's a full-blown accounting software. So that means that it can do everything you need it to do. It has a very professional look and feel. All right, so it is very professional. You can send professional looking invoices. It's the best software in the industry, hands down. Every single year, it goes through a rating process, and it is the best, number one, hands down. There are others out there, but QuickBooks is the best. Plenty of discounts offered, especially if you're working with somebody like myself, who's a certified QuickBooks Pro advisor. And then it saves business owners a ton of time, 10 hours a month on average. If you're an attorney making $500 an hour, well, that's $5,000 a month, $60,000 or so a year that you're saving just by having something like QuickBooks. The cons, you do need some training, so we do offer QuickBooks training, just about an hour, nothing too crazy. You know, you do need some training to get the full benefits of it. So with that being said, you know, would love to open up the floor for any questions. Thank you guys for being a part of this presentation. I promise we'll be done by 12:50 and we're 1 minute over, so my apologies on that. Here's my contact information for those that are on the Zoom. My email is jb@badutaxservices.com. Once again, jb@badutaxservices.com. Phone number is 773-679-7198. Once again, 773-679-7198. With that being said, let me go ahead and stop sharing the screen. And I got a few questions that came up first. So let me go through those questions. So we have a question here as, what was the amount you said if you make over for a 1099? It's actually $600. So if you have $600 or more that you made from somebody, they're going to send you a 1099. But you need to file taxes if you earn at least $400. So it's kind of tricky. The IRS will get a 1099, and sometimes they even get 1099s below $600. But they will get one for $600 and above. And they will ultimately, you still have to file taxes if it's over $400. It's not your 12. Some people have said 12,000, right? So that's a complete myth. It's just $400 as a self-employed individual. Another question here: to deduct expenses for your business, is it necessary to use your business credit card for all expenses? Yes, you should be using your business card for all your expenses, all of it, right? You don't necessarily have to get the deduction, but you should, because it creates a nice paper trail, a good audit trail for you, so that you don't get in trouble from the IRS. Basically, when a business expense is tied to the business card, it just makes it look a lot more legitimate. IRS sees, hey, Chase Inc. business card, right? The audit would be a lot cleaner for you. And then what's the percentage home office for renters? It's simply you take your home office square footage divided by the apartment square footage. That's the percentage you use. Question is, kindly expound on health insurance premiums, supposing the corp pays different rates for different levels of employees. Basically, that one is easy. Whatever the corp pays for health insurance, you get to deduct that as on your taxes. Very, very easy and straightforward. So if the company paid $10,000 in the year for employees, then you get to deduct that as $10,000 as a health insurance expense. Question is, if you were to file taxes quarterly, and I think you mean if you were to pay taxes quarterly, is it separate for both your business and your personal income? That's a great question. If you have a single member LLC or a pass-through entity, then it's actually the same. You make one estimated tax payment each quarter for both your personal and your business. If you have a C corporation, then that one is different. Only C corps have to pay two different levels of taxes, one at the corporate level and then one at the personal level. Thank you. This was super helpful. Absolutely. Shout out to my beautiful wife Yvonne that's on today. And then let's see. We have a question here. And I guess she said it's not tax related, and I think it's important to mention this. But how does your personal credit affect your business credit? Basically, in order to get business credit, you need to have good personal credit, at least 680 or above credit score. That allows you to get business credit cards, business credit loans, things of that nature. So you should keep your personal credit up, because that's what gets you in the door for your business credit. Now we got a question on Instagram. Question here is, could you explain taxes for single member LLC? Real simple, real short. You use a Schedule C on your 1040 individual tax return when you're filing your personal or your 1040 return. So your single member LLC goes on the same return as your individual tax return. If you have an S corporation though, that one goes on a separate return, but then you receive what's called a Schedule K1 and you attach that to your personal return. And you actually pay taxes on the personal return. You don't pay any taxes on the S corp return. So just think about it. If you have a single member LLC, then you file one overall tax return, which is your 1040. That's where you pay all your taxes. And then if you have a S corporation, partnership, a pass-through entity, or even a C corp, then you have to file a separate business tax return. For example, S corp is 1120S S corp tax return, and then it also passes through. As long as it's not a C corp, it passes through, and all the taxes get incurred on your personal tax return. So if you need more explanation on that, just please let's catch up after this as well, because some of these concepts are very complicated. Yeah, Peter, you said, thanks, Jeff. You got great minds for business. Absolutely. Mary said, what virtual businesses would be great to start? I mean, it depends. Remember, one thing about me nowadays, I don't tell people to start a business just to start it. Like, when you're in business, you have to love the business that you're in. So I can never tell somebody, hey, you should be in this business or that business. Absolutely not. You have to yourself find what it is you're interested in. If you're a medical professional, maybe it's a hospital. If you're an accounting professional, maybe it's a tax firm. If you're an attorney, maybe it's a law firm, right? Or it could be an app for law firm, or an app that's created by attorneys. That's for, for people who are looking to do like their own DIY, legal documents. For example, LegalZoom, or LegalShield, So as far as what businesses would be great to start, that's really based upon what you're interested in. So for me, it was a tax firm, right? Because I'm an accountant. I'm naturally good with numbers, and I like numbers. That's another thing. Not only do you have to be good at what you do, you have to like what you do too in order to be successful at it. And any business can be virtual, by the way. Any business. Give me a business and I'll tell you it can be virtual. Trust me. Because you can do consulting nowadays. Anybody can be a consultant. If you're really good at what you do, it can be the most brick and mortar business. As long as you know how to get on a computer and do a Zoom meeting with somebody and tell them and teach them something, and if you need demonstrations, you can use like simulated apps and softwares and things of that nature. Of course, it would be nice if it was in person, like if you're a doctor or if you're a nurse, but you can consult people, right? So any business nowadays can go virtual if you really, really want it to. So we have, we'll take last question today, and that is, so S Corp is good for active businesses. Absolutely. Yeah. So if you're a doctor, attorney, medical professional, anything that's actively doing business, something that's not like real estate investments or, passive income, then you should use an S Corp. And then, yep, absolutely. Thank you for this session. Yeah, we thank you guys for being a part of this. So not to cut it, actually, you know what? Let's do this. Let's take one more question. Anybody this is an opportunity to ask one more question if you want, and then we'll wrap it up for the day. Mm-hmm. That's a great question. So you cannot write off, Ryan asks, can he write off scholarships as an expense? So you cannot write it off directly. It has to go through your 1040 Schedule A itemized deductions. So let's say you gave a $5,000 scholarship. Well, now you have a Schedule A itemized deduction of $5,000. And if you're a single individual, you need at least $12,000 worth of those to get a benefit. And that bucket, so Schedule A itemized deductions include mortgage interest, property taxes, donations, state and local income taxes paid up to $10,000. So as long as you have all of those and it's $12,000 or more, if you're married it's $24,000 or more, then you get a tax deduction for that. What you can also do is you can start your own foundation like we did. We give out scholarships now through the Badu Foundation as opposed to us personally. Because it gives us a bit more leverage. It still gets deducted on the Schedule A, but there's a bit more room, there's a bit more flexibility with that. So you can't deduct it on your business return per se, but you will deduct it on your personal return. Hopefully that answers your question, Ryan. No problem. All right, so with that being said, let me go ahead and stop the recording. Thank you guys for being a part of this session today. Hopefully you got something out of it. Remember, my phone number is 773-679-7198. Email is JB, J as in John, B as in boy, at Badu, BADU taxservices.com. JB at Badu taxservices.com. Please be well, be safe, and hope you guys have a productive rest of the day. See ya.